Is real estate still a good investment? That's one of the top questions I'm getting lately, especially in 2025. You see, real estate has always been called the safest way to build wealth. With property, you own something tangible, unlike stocks where your certificate represents shares of a company. Plus, you get rental income, which helps cover your mortgage. And historically, property values have risen nicely over time, especially in major cities. That's why when I grew up in Hong Kong, everyone told me to buy property as soon as possible. And since I didn't start until my late 20s, I felt like I was already behind. So I made the plunge and bought $1 million apartment in central London. At first, I loved it. I rented out the place and received rent checks every month. Then tenants would call me in the middle of the night about leaky taps or broken appliances. My building was old and needed constant maintenance. It was a lot of work, but I held on for years. Eventually, I sold it for a handsome profit and thought, wow, real estate really does make you rich. But now things are changing. In 2025, there are new opportunities and risks that we need to talk about. So stay tuned because in this video, I'll break it all down for you. First, let's take a look at the current market. Interest rates are at record highs. That means borrowing money for a mortgage is super expensive right now. In the US, for example, the average rate for a 30-year fixed mortgage hit 6.3% in January. That's nearly double compared to just 2 years ago. Mortgage applications have fallen to their lowest level since 1997. So people aren't buying as much. Then if you go to Canada, the government recently tightened rules to qualify for a mortgage. Now borrowers must stress test their ability to handle higher rates. And in Europe, regulators are worried about excessive risk in the real estate market. House prices have already started falling in some places. Overall, 2025 is a turning point for housing. There are still deals out there. But you can't just buy anything and expect it to automatically go up in value. Now you need to do your homework. So before I tell you the pros and cons, don't forget to hit subscribe. It really helps me grow. Thank you. Let's start with the good news. What's the appeal of real estate in 2025? First, stability. Property is an actual physical thing. So if it's in decent condition, it won't suddenly disappear like your crypto investments or meme stocks. Second, rental income. Most rental properties have enough cash flow to cover your mortgage payments. This means you're generating extra money without needing to sell your asset. Third, appreciation. Real estate prices tend to rise slowly but steadily over time, especially if you're in a growing city. Fourth, inflation hedge. When prices rise overall, property values usually keep up. The same is true for rental income. You can raise rents along with inflation. On top of that, being a landlord gives you some control over your living expenses. So those are the advantages. But let's now talk about the cons. So what's the bad news? No. One is interest rates. It's significantly more expensive to borrow money today compared to just a few years ago. In many countries, higher interest rates mean higher mortgage payments, and that eats into your profits. Number 2, economic uncertainty. We've had a decade of low interest rates and easy money, which inflated asset prices across the board, including housing. But now we're facing global challenges. A recession could reduce rental demand and put downward pressure on prices. So you want to be careful. Thirdly, liquidity issues. You can't sell a property within days like you can with stocks. It takes months to find a buyer and complete the transaction. And sometimes you have tenants who don't move out on time. That means your money is tied up for a long time. So these are the risks. Now you may be thinking, well, 2025 is not looking so great for real estate. Should I stop investing in property completely? Well, here's what I think. Instead of abandoning real estate entirely, consider this. Do you know someone who owns a house? Chances are they're doing okay. Even if their property hasn't gone up much in value, they probably enjoy stable shelter and predictable utility costs. They might even collect rental income from tenants. So it's not a disaster if your house doesn't skyrocket in value. As long as you have a roof over your head and maybe some money left over, that's a win. So here's my idea. Why not explore alternative options? If you're unsure about buying physical property, look into stocks, exchange-traded funds, or REITs. These are publicly traded companies that invest in real estate. REITs are required to distribute at least 90% of their income to shareholders. So they're good for beginner investors. They offer diversification and liquidity and can provide a nice dividend stream. Or you could check out digital real estate. That's virtual land in the metaverse or online businesses like websites. Of course, these come with their own risks and potential downsides. But the point is diversify your portfolio. Don't put all your eggs in one basket. You can still own property and invest in REITs. That way you're getting the benefits of both worlds. Okay, so how should you actually get started? Here's my recommendation. Firstly, rental properties. If you can afford it, consider buying a rental unit. Even if interest rates are high, locking in a fixed-rate mortgage can protect you against future rate hikes. Plus, a good tenant can help cover your expenses and increase your wealth over time. Secondly, REITs. Start with small amounts and build up. They're perfect for beginners. Just choose reputable companies with a track record of steady income. Finally, crowdfunding platforms. These let you invest in larger property projects with less money. It's like splitting the bill with other investors. But remember to research thoroughly, as returns aren't guaranteed and some platforms may charge fees. So let me wrap this up. Real estate is a powerful tool, but you need to use it wisely. Just because your parents or friends have bought property successfully doesn't mean you'll have the same results. You need to evaluate your own financial situation and location. Look at local market conditions, interest rates, and your personal circumstances. If you're young, starting with REITs could be smart. Once you gain experience, you can look at direct property investment. But if you're older and ready for something more hands-on, buying a rental unit might be ideal. Either way, don't rush into anything. Take your time to learn and prepare. Get a good deal. Focus on cash flow and don't overpay. Understand your numbers. Make sure rental income covers expenses and interest payments. Also, factor in taxes, insurance, and maintenance. Diversify your investments. Don't put all your money into one property. Spread the risk across multiple properties or investments. So to answer the question, yes, real estate can still be worth it in 2025. But it requires more knowledge and planning. Be smart, do your homework. Plan for the future and don't fall for get-rich-quick schemes. Remember, success takes time. So thanks for watching. If you enjoyed this breakdown, hit the like button. Subscribe to Wealth Sprint for more tips. And grab my free guide to investing in 2025. Stay smart. Keep learning and you can achieve your goals. See you in the next video.